Hey, what's up everybody? Michael Lamar here from Wall Street IO, the #1 backtesting platform for swing traders with your quick little weekend update for you. Today we're going to talk a lot about the idea of late cycle or early cycle in the context of Apple chart. I'm also going to tell you where I think Apple's probably going over the next week and for the rest of the month. So stay tuned. What I want to do to start off is I want to talk about the long-term outlook here on Apple, because I was looking at this monthly chart and you can kind of take a look. We've got a few major highs here that kind of represent Apple's trading over the last, 5 to 8 years. Okay, this high, if you remember, brought the stock pre-split. Remember, it went up to $700. A lot of people thought it was going to $1,000. It basically stopped, I think, at 704 and then pulled back. This pullback represented about a 35 to 40% pullback. It was very, very big in the face of a overall broad market that was still sideways to up. So we had a pretty big pullback here in Apple. And then the stock climbed. You can see this big climb. This climb lasted a couple years all the way to the highs here. And then again, the stock kind of topped out, formed what I call a dome, and then pulled back. We had a long pullback that lasted almost a year. And then we got this nice rounded bottom. Again, this is the monthly chart. And then we had this big climb here over the last couple years. So you could see right now, when you think about the idea of cycles, are we early cycle or late cycle? Early cycles basically when you get in towards the rounded bottom at the bottom half of the channel. Late cycles essentially when you're back up at the top of the channel or resistance. So again, we have early cycle being here, and late cycle being here, here, and potentially getting close here. Now what's interesting here is it looks like we're basically hugging this resistance line, and if we could actually stay above it, maybe we'll see another big leg higher that takes us to $200 or more. And it could actually happen in the next couple months if the stock behaves. But one thing I did want to let everybody know is that we are very late cycle when it comes to the longer term monthly chart. Okay, so I want to jump back to the daily, and then I'm going to go ahead and clear this out. Now what I want to highlight for you first is the daily trend. Okay, so when you look at the daily chart, you can see we've had this nice trend that has kind of come across the bottom there. Again, you have the resistance point that comes across the top. Now, for the last couple weeks, I've been giving you kind of a cautionary note about compression and possibility of a stock grinding. And my main message to everybody over the last couple weeks has been have some patience, because the stock could get really, really nasty and choppy, and that during those times it's really difficult to swing trade. And for anybody who's attempted to swing trade the stock over the last couple of weeks, you've probably been met with a lot of whipsawing and chopping. It's been very difficult to do so. And that's very common in the month of June. Now we're now through June, and we're through that nasty part, which is good, and on to July. July and August are normally better times of the year. But if you remember, again, as we started to come into June, I gave everybody a warning. And I've had lots of people email me and thank me for that, because we gave a big pullback here in the stock. We had a big pullback that I warned everybody about. And then over the last couple of weeks, I kind of warned everybody to stay patient because we could experience some really, really high chop. Now, if you look at the stock right now, I'm really happy that we've held the 180 level. As you've known over my last few updates, 180 was this kind of value range right here. And we spent a lot of time chopping and going sideways in this range. And the fact the stock kind of came down to this range and tested it here and bounced, I think is an overall good sign. The next stage was the 185 stage, which was right here. Again, we kind of chopped towards that range, but again, we stayed above it, which I think is good. Now, we do have a little bit of resistance right around the 190 area. And if we can get above that, then I think we're probably heading up to 195. Remember over the last couple weeks, as I told everybody to stay patient, look for a good trade setup, basically stay patient and look for a good trade setup. I think we might have finally gotten it with this little doji right here. We formed a little doji here on Thursday, and then we basically broke above that doji here on Friday with a nice little up day. We're up $2.50, brought us to the top of this little sideways grind. Again, my metric system for tracking these breakouts is a 3-point system that goes, as long as we make new daily highs, make higher daily lows, and close at new daily highs, we can consider the uptrend or momentum to be strong. And so this week, I'm going to be looking at those 3 factors, and if they continue to stay true, I think 190 is your first target, and then 195 is your second target. If we fail to close at new daily highs every day, I'd be concerned that we would still be kind of choppy. So next I want to bring up the MACD really quickly because I think the MACD is important. When we load up the MACD here on Smart Studies, which also allows us to backtest it, we can load the MACD up maybe with a 3-year time frame. You can see that the MACD is actually getting really close to crossing to the bulls. Really close to crossing to the bulls. It's made a nice little swoop down here. It's been going sideways, which, as I noted last week, is a very common indication of a compressed stock, which is what we had. But I think if we can get across here with a strong move, it's very likely that'll have the bullish payday cycles start to form a little bit longer cycles. Okay, so when you take a look at the MACD, what I like about this is it kind of looks like it's forming a little bit of a channel. Okay, so when you look at the MACD channel here, you can see the top of the range or top of the channel would be somewhere around here. So if we do get a good July and August, I would expect the MACD towards July and August again to come into this range. Okay, and if you get that big swooping thing, then you'll have a nice little MACD cross. Remember, we have all the data, and what it says is that when the MACD is crossed to the bulls, which would happen maybe in the next week, the payday cycles to the upside are generally longer. A payday cycle, if you remember, are these 6 to 8 day swing trades that we like to catch, and we use the Heikin Ashi chart to kind of catch them. So here's a bullish payday cycle. Here's a bullish payday cycle. We had a very choppy bullish payday cycle over the last 5 trading sessions or so, and we could have potentially started a new bullish payday cycle going forward here. When the MACD is crossed to the bulls, these bullish payday cycles tend to be a little bit longer in length. This last bullish cycle, by the way, that compressed and went nowhere, happened while the MACD was bearish. And we also know that when the MACD is bearish, those payday cycles tend not to last very long. So we're just kind of using the data here again. When we look at just the basic numbers of the MACD by itself using it, you can see we have the test results over here from our back test. Great batting average, 12 wins, 9 losses, very profitable over the last few years. The average win is over $8 and the average loss is under $4. So we have a good risk reward there. Again, these trades tend to last about a month. So if the MACD crosses to the bulls over the next week, it'll likely stay crossed for about a month at least, okay? Also, we know that when we use the payday cycle strategy, let's just go over the last year. I'm going to load up payday cycle here. We can look at the results of the last year under the payday cycle strategy. And the payday cycle strategy, again, is very simple. It's simply buy at the close on the first green one and sell at the close at the first red one. It's been very profitable over the last 8 to 10 years. It's been very profitable over the last year. You can see on our backtest results here. Batting average usually hovers around 50%, but what makes it so profitable is the average win is over $5 and the average loss is under $2. These trades only last about a week, 7 days or so. Okay, so again, if we get one that is starting here and we continue to make new daily highs and close there, we could be starting a new cycle, and that could take us through this week and maybe halfway into the following week. Okay, but we will keep you updated, and I will give you an update in next week's video. What I'd like you to do right below this video is go ahead and write down in the comments. I'd love to hear any highlights that you had from today's video around early cycle, late cycle, or simply around the idea of backtesting and utilizing payday cycles and the MACD and seasonality and all the other tools that we have here. Leave the comments right below. I'll reply to each one. Thanks again. This is Michael Lamar, and I'll see you next weekend.